Business news continues. China announcing plans to channel hundreds of billions of yuan annually from state-owned insurers into shares. It's the government's latest effort to support a struggling stock market. CNA's Si Hui tells us more.
Led by the chief of the China Securities Regulatory Commission, officials from 5 government departments joined hands to map out the latest action plan to boost the country's stock market at a news conference in Beijing. Among other things, officials said large state-owned insurance companies will be encouraged to set aside up to 30% of new annual premiums to be invested on domestic stock markets. Mutual funds will also be encouraged to increase their A-share holdings' tradable market value by at least 10% annually over the next 3 years.
大事不过夜啊，也不能过年，更不能过年，所以我们要只争朝夕啊。中长期资金是资本市场的重要的专业投资力量，也是维护市场平稳健康运行的压舱石、稳定器。
China will mark the Spring Festival holiday next Tuesday, and the local stock markets will close for a week until the 4th of February.
They wanted to bring forward policy measures as earlier as possible so that it can translate into better economic activity afterwards. Because usually right after the Chinese New Year, the stock market will have a period of good performance. It does put stability of the fund as the top priority. Performance is still something in their mind, but they're happy to extend the performance review period from very short term to medium and long term.
Officials also pledged to create a market ecosystem more conducive to long-term investment by strengthening institutions and systems that protect investors' rights.
Because some of the Chinese insurance companies are listed overseas, the investment principles align with the international standard might be something that could benefit their valuation overseas. And also there's a good communication message to the international investors.
Chinese stocks posted their first annual gain last year since 2020 after the government introduced a slew of stimulus measures last September, with the central bank pledging to provide liquidity tools for stock purchases. Boosting the capital markets is seen as an important piece of the authorities' strategy to snap the economy out of its current doldrum. It's hoped that by supporting the stock market, it will eventually have a spillover effect on domestic consumption, which has been sluggish amid a prolonged housing slump and a weak stock market. China has more than 50 million active retail investors. Official data showed more than 200 million people in China have stock accounts, and the number of new stock accounts surged following the September announcement. There are also more than 700 million mutual fund investors in the country. Si Hui, CNA, Beijing.
Earlier, we spoke with an analyst who highlighted growing potential for retail investors in China. The government, as we heard, they're taking steps to boost domestic consumption.
What we are seeing is domestic retail investors still have huge potential to raise their equity allocation. If we look at Chinese household assets, they only allocate around 10% into equities as well as mutual funds, which is much lower compared with other global markets. So if we look at household savings, which have also increased during the past 2 to 3 years, that gives them the potential to invest in the equity market if sentiment improves. So what we are seeing now is the investor confidence or consumer confidence matters much more than the buying power. So that's why we still think the policies matters, especially whether it can effectively boost investor sentiment matters more for the coming months.